Hey everybody, welcome to this week's Forex Focus. I hope you are all doing well. It's probably going to be a bit of a quick video today because I'm traveling today, but I wanted to get this out there to you guys and girls anyway so that you had a bit of an idea as to what my thoughts were for the week ahead with regards to the currency markets. So let's jump straight in. We'll start off with the Aussie dollar. The Aussie dollar here, as we can see, it reacted to the level that we were looking at last week. So last week we identified two levels across all of the different major currency pairs where we were looking for essentially a US dollar bounce, and that's pretty much what we got across the board. And we didn't even have to wait for the more sort of like conservative entry where the market would pull back to the second level. For most of them, well, for all of them actually, they actually went from the first level, which is nice. It's always nice when you get into a trade and it goes for you, pretty much immediately. So if we quickly go across, we had the Aussie dollar over here, so the market had been trending to the downside. We've got the same thing with the euro dollar. As you can see here, pound dollar is the same thing. So essentially what we've seen is dollar strength across the board, across all of the different pairs, as you can see. Dollar CAD over here as well, dollar franc and dollar yen. So we were looking at pretty much a dollar story across the board, which is essentially what you're doing for the most part when you're trading the majors anyway. Now, when it came to the Aussie dollar, we got the bounce, able to take profit there pretty quickly. Going into this week, I'd be looking for a continuation of that. So the markets are now trending beneath both the longer term and the shorter term momentum moving average. So from that perspective, I'm going to be looking for breaks to the downside here. If we do get a pullback to the level, and this goes for all of the other pairs, then I'll be looking to sell at those levels again, because I think at least for the next sort of month or so, it is going to be a case of buying into dollar strength. So if we get any rallies with the Aussie dollar being the base currency here and the US dollar being the quote currency, if the market is moving down, that essentially means that the dollar is strengthening. So we're going to be selling into those rallies for the most part until the data starts to change. And of course, this week we have the ISM coming out. We've got the non-farm payrolls, so that might start to change the picture. Although I think that really for the foreseeable future, as much as that data is going to have an impact, what is going to have more of an impact is what Trump does with regards to the trade tariffs. So that's what we're keeping an eye on. But I think that ultimately I'm going to be looking for a sell here. So the market already reacted to that level, and now I'm going to be looking for a sell into the momentum as it breaks to the downside. The euro dollar reacted to the level as well. Again, the way that we'll sort of play these is you can look for either trailing your stop all the way above the second level there, or you can put your 2 ATR, and I'll do a video about my 2 ATR stops. But essentially what that means is that you would go in here, you go 0.76 pips, 2 ATR stop, or at least a 2 ATR target, which means that you'd be looking for 150 pips on that particular trade. As you can see, that this one is sort of like firing off towards this profit target. It's not quite there yet. So if you're already in this, it looks good to hold. If you're not in it, then I'd be looking to essentially add in a position there when we get a further break to the downside. So we got the reaction, which is exactly what you want. Now what you want to see is you want to see the market break further down. So that's what I'm looking for going into this week. Unless, of course, as I said, when the data comes out, if the ISM is, horrendous, for example, or if we get any other sort of data out there that points to the fact that perhaps we aren't going to get as much I won't say US dollar strength, but let's say US dollar stability in any case. And the other side to that, of course, is that if the other regions start to recover and they start to print positive data, because a lot of the dollar positivity is worked into the price, you might see an overreaction to that, in which case we might then start to see these things turn around. But at the moment, as I said, still looking at the dollar strength there. The pound dollar is exactly the same. This one is probably more ready to go at the moment. It's just the pound's been a little bit more resilient. But as you can see here, it also means that it's given us a bit of a better technical setup in terms of being able to sell through these lows here. So what I would wait to do is, and this again, these videos here, it's not investment advice, it's not trading advice. I'm just telling you what I'm doing with my own portfolio. You then have to go and decide whether it's right for you. But what I would be looking to do here is wait for a close beneath this level at the 1.2392, and once we get that close, then look to sell into this, targeting towards the lows here. Although I would come out before we get to the lows. When I take my trades, for the most part, I don't want the markets to do anything extraordinary for me to be able to take profits. I want to be able to get out before we hit, recent lows, or have to break onto new lows or new highs if we're in an uptrend. The New Zealand dollar didn't quite get back to the levels that we were looking at for an entry. So from that perspective, there wasn't anything to trade here. But going into next week, again, I'd be looking for breaks to the downside. So anything below 0.5622 would be a good indication for me that the markets are probably going to move lower. The dollar CAD is a tricky one here. It was a tricky one last week. So we've got these two levels in here. It's sort of meandering and moving to the side. Or moving sideways, and again, that's a lot to do with the potential trade tariffs that we're looking at in the US for Canada, or for Canadian products. So from that perspective, this is a little bit more difficult to trade, because I think it's more sensitive to that situation unfolding there. So essentially we could get a little bit of volatility in both directions. So I'll probably stay away from this one for this week, even though I think that in the longer term, this is probably going to, if we go towards 150 within the next couple of months, I wouldn't be surprised at all. But obviously, like I said, there's a little bit too much risk, excuse me again, on the board here for me to be interested in that one, and there are better opportunities out there, particularly if you look at the crosses as well. And in these videos here, we're just looking at the majors, but you've got to remember that there are sort of like 27, 28 other tradable currency pairs out there that you can pay attention to if you wanted. The dollar franc bounced from this level as well. This is one of my favorite trades. I said this last week. I know that this one breached the first level a lot more than the others, but generally speaking, I'm more interested in franc weakness. So I think that's going to be one of the more obvious trades for the rest of this year, or certainly for the first half of this year, against any of the currencies. I think that at the moment the franc is a little bit resilient because there's a little bit of a risk-off dynamic going on in the markets. But generally speaking, I think the franc spent a lot of time strengthening over the past year to 18 months. It's only recently started to turn around, as you can see here. But I think over the next year or so, as the world starts to recover, as sentiment starts to improve, I think the franc will go back to being the funding currency. It won't be, or it will. It's not that it will ever lose its safe haven status, but people won't be focusing on that. So I very much like franc weakness going into the rest of the year. And then we've got the dollar yen. This is a bit of a difficult story. I think that if the market, we could draw on a trend line over here, like so. If you get a break to the upside, it is something that you could look to trade. I think there are more obvious trades out there. The dynamic with this one at the moment is the fact that generally the Federal Reserve are cutting interest rates, or they're expected to cut. Not as much as we probably previously thought, but they are still expected to cut. And the Bank of Japan are looking to make measures to have tighter monetary policy, maybe raise their interest rates a little bit, which could play into the fact that there will be less of a differential between the two regions. But having said that, you've got to see where interest rates are in Japan at the moment. And even if they raise, there will be a narrowing of that differential, but it's unlikely to completely flip the other way. So from that perspective, it's going to be an interesting one to look at. We probably will get some yen strength going into the the first half of this year and also the back end of this year. But at the moment, the trend is still to the upside. So you have the choice of either buy with the technical trend or wait for the technical trend to align a little bit more with what the fundamental outlook is, which would be to the downside in this particular pair, and then trade accordingly. Okay, so I hope you've enjoyed the video. I hope you found it valuable. If you've got any questions, as always, please feel free to let me know. Otherwise, have a fantastic week in the markets, and I'll speak to you soon. Take care now.